Good morning. So, question here, is this a continuation gap? Maybe, but it's not your typical continuation gap. Not the most reliable type. We'll see how much it holds up here. Good morning. Good morning. And the reason is that this had a hell of a run. Sending me messages. Oh, okay. We'll get to the charts. All right. So it could be a continuation gap, but typically continuation gaps don't historically happen after a run from the bottom of the range or below it to above the top of the range and a little bit of chop like this. They often happen when they come out of more of a consolidation, a breakout and run, a correction bar or two, and a continuation. Now, this doesn't mean it can't continue, just as we weigh one type of a pattern against another, we know historically that this one has lower probability than the one that I explained than this one. It's up against 30,000, backed off from that once sharply. And we're looking at the futures here. We're not actually looking at the gap. So considering the fact that it backed away from it once before, there's pluses and minuses to that, meaning the reaction and sell at 30,000 has already happened once. Kind of takes the newness out of it, if you will. No, we haven't, McGraw. We would never do SPX without you in the room. Kidding. But so this is the second time there. So let's say it's having, other than a better word, less of a new first time testing it, an obvious place to sell. However, it created a big topping tail. So it's an obvious place where sellers took control, and just looking at patterns in general, like this didn't quite get up to this nasty reversal pattern, but when it did, it stalled there and the attempts to turn up failed, and then it went down. So this is going to retest this area for the second time, and we'll see what it does. Now, bullish patterns, retesting bearish reversals, chop sideways, they form bottoming tail bars, they form red bar ignored, and so on. So we'll see what this does intraday. And of course, at the end of the day, we'll see whether this is a green bar or a topping tail bar or red bar, whatever it's going to be. So that retest pattern that occurred last week, now it's run up into resistance. An obvious place for those that were long through here are going to sell and see what happens.
Call from 35989.
Okay. Look at the diamonds. And 300. Gapping up to the top there. Same analysis, gapping up there. And we'll see if it holds on to it. It's not going to be a great short setup, I don't think. Well, we'll see how this develops. It's probably better things, but we'll see. We know that the Qs are weak, but we'll get to that. Let's look at the S&Ps. So that isn't quite up to the topping tail yet, and that backed off quite a bit more. And so the beginnings of a breakout failure going on there. So bulls are going to want this to stay above this area, and for sure above 3,600. So this is already being rejected, but it hasn't broken below the breakout bar. right here. It had a nice little pop. Profit taking came in right away. It hasn't completely failed. Breaking below this pivot low would open up the door to potentially a sizable pullback intraday because of the way it ran up. That's the void. Right? Momentum move, wide range bar, sideways, time correction, big void. We'll wait and see. SPX. Let's look at SPY first. All right. 361 to 363. So on the put side, we'll look at the SPX, but under 352 for spiders. And I would look how much premium there could be up above. That would be the first step as it's moving up. If it doesn't fail, what we had looked at over here, the breakout failure, if that doesn't fail and it begins moving up and those premiums pop, we just see how far away we can get. That's what I call the factory work. You look at the options table and you just look at what is a reasonable amount of money on a bet that prices won't get to a certain level. I'm just looking at this. Say that's a big bar. It's a big bar. And if I take that and just project it up, kind of a measured kind of a move. If there was anything at 380, I think that would be a safe. Above 380 would be safe. We could do the same thing. We got this big tail there. 3,800 just seems too far away to be reasonable that there'd be premium. Mm. Well, 37.50. See if there's any premium there. 37.50, 36.70 to 50. I don't know about 36.70 might be a little tight, but let's see what it does at the open. And the S&Ps are not up to the prior high. So, I mean, that measurement on the SPX is giving extra room that may not be needed. But 36.70, I think, is too close for comfort for me anyway. I think you got to get at least above 36.80, 3,700. All right, let's look at the others. NASDAQ's down, right? Not much, but down. And that could put a lid on SPX, unless this does a big recovery. This is where all the big boys are, the technology. So is the financials, which got out of their trading range last week, and oil, which broke the downtrend on the daily. Are they going to help carry? I didn't even look over the weekend at all the Dow stocks, but like Caterpillar, it makes sense that that's up 76, gapping up there like that. That's a mess. It's interesting. Such a mess. So, we'll assess at the open. NQ was up 119 last night. So, that's the bear case. You can't, you want to see markets up. Ideally, markets are gapping up, but not gapping up huge, right? Some excessive gap. And you want to see the NASDAQ participating. to say, being on the bullish side of things. So this is getting down near support. So, I mean, that is a plus. So, maybe 15 minutes of chopping around, we'll see, maybe a breakdown failure. But the fact that this has come down into the area of support, it's an area. And if it was all the way down here this morning, I would suspect that this would go up, and that would help the S&P and the Dow continue to go up. But because it's not all the way down there yet, this may be what kind of drags it down for a bit. And it's just in a trading range, When we look at the higher time frame, we do our factory work. It's in, it already tested the middle of the wide range bar last week, and it survived a neutral bar. As long as it stays in that upper half, we have to say that the weekly chart is constructive to building a consolidation that could go higher. As it starts dipping down below last week's low, right here, well, odds are that it's going to go down, and then we just got a wide trading range until it breaks down or recovers again. A lot of running in place. Looking at the weeklies here, obviously that gapped up at the high. Strange patterns. I'm really kind of not sure. Other than to say overall it's bullish, but can it continue to develop? And what I wrote in the letter was, all of these things are positives, but historically they need a little bit more of rest to build a new launching pad. This head and shoulders that was developing, it failed. It failed over here. It failed over here. That's all positive. But historically, they do produce a little bit more of a consolidation. It's neutral in the moment, but what I explained in the letters was that the intraday patterns were supportive of moving up to go long. But now we've got this gap up. So, that idea is shot. So with the futures, up where they are here, that close, it's like, and this beginning to happen at this point, I'm kind of a little bit more inclined that if it breaks down here, that I'd be more comfortable shorting than, for a short-term trade than trying to go long, which this has been rejected once. It's not like it's going sideways here and now I can get a run up to this area. So kind of like in the middle of nowhere at the open as to what to do. So I know what to do. Do nothing and wait to see if it breaks down or chops around here for a while. We'll look at what individual stocks do. This looks more like the Dow. It's continuing that move. Well, it's not up near there, so maybe it can get there, but it's not that far away. Bonds, going back down here. They're trying to make a low. If you're an intraday trader, you can always trade almost anything. Gold back down again. Well, we didn't look at oil. Yeah, oil perking up. Nothing is clean, and multiple time frames in alignment that provide those high odds trades. No, nothing here. Gold. What a mess. This is all Dan's fault for sure. Anyway, I'll have to clean up this mess at some point. Silver. A mess. Yeah. Yeah, copper looks good. It's kind of a shallow pullback for that hook pattern, but some gap area. Yeah, that could be a day trade. How about wood? Maybe there's a pattern in wood. But wood is bullish too on the long term. Anyway. soybeans. There you go. Maybe we got to start trading ags. A little extended, but geez, that commodity's going up. Anyway, all yours, Dan.
All right, good morning. Yeah, we actually have 11 open positions, 10 bullish, only one short, which big C we're short, gapping up a buck here, but we still have a nice open profit. But when I see a big gap like this, unless you have the beneficiary of having all these open positions, then for new trades, it's difficult. There's, as Greg said, I'm doing nothing at the open here. Gap into resistance, 500-point gap. Just still day trading. Junk is in play again. Junk, we're gonna have to cancel so many of our long ideas from the weekend. I just set out a Telegram alert, CCL. We wanted to go core long this piece of garbage, but now it's gapping up. Jets, restaurants, all had amazing gaps, and a number of them were reversing, like hotels, like our Wynn. We sold a put spread Friday. H here, or Hilton rather, we're looking to sell an out of the money put. I told this to Greg, and you all remember my silly analogy. Hilton Hotels here. Look at this. It made an all-time high yesterday with their business absolutely devastated. So why is that? Whoever believes in fundamentals, why you're paying record prices for a beat up asset, and so it's that's what price earnings means. So PE is it's expensive here, but people are chasing yields. There's no fixed income market. You aren't going to make any money with yields the way they are. Yeah, but why don't you buy Hope when it's cheaper? I mean, just these things that are at all-time highs with record unemployment. Do you think restaurants are doing well? Well, so why is Eat here at all-time highs? This one I posted as a new core long. So unless it's something like this, that's not up 6 bars and gapping up 500 points, it's a new trade. So I gave this long 30-minute high. It's gapping, yeah, $49, but it's not insultingly high. Our stop is Thursday's low, and it's a breakout all-time highs, daily, weekly, monthly. Okay. Oh, someone on YouTube's asking about Myrna. So yeah, but Myrna obviously is what all the talk is about this morning. Vaccine news. Oliver's asking about, should we short Myrna? The answer is, I have no idea. It has to be a setup. There's not right now, but it is a big percentage gap. 101, it's gapping to all-time highs. But there's no setup pre-market here. We actually are short the $55 puts. Actually, I made 2 adjustments. Let me give them to you all. So this is one. Let's just bid 2 cents to get out. I have no idea what it's going to be at the open. I have none, but the short strike it's 50% of the stock's price away. So I really have no problem that one riding it out for full profit, but it's a bio. So if we can get out at 2 cents and make 99% of our max gain and not have to sit through it. Look what happened to Bib. Another bio went up on some positive something or other news, and then they had a change of heart. Wes, I couldn't tell where it was gapping earlier, so I'll advise within the first 5 minutes. I wanted to see if the gap was excessive or not, because I still like it as a core, daily, weekly, monthly. It has room. So that one I'll tell you. But secondly, we do not have a 15-minute high rule. You said that to me last week, and I thought I corrected you. Our trading rules is if it gaps over the entry, it's a 5-minute high, and then 30-minute stops if you're on the stop side. SPG, let's see, Tyson here at earnings. Did one of you just say you wanted to short Tyson? I don't see any pattern to short. SPG, yeah, SPG, we actually have a custom. We're short $65 puts, and then we have a short 85.90 call spread. All right, let me continue here. But yeah, we have short put on PSX, but some of these, I think I start watching these for core longs. This had a nice 180 reversal here. It's holding the gap. I like the retest on the monthly. XOM. On today's UNG short. UNG, I don't know what UNG, I'm not getting a symbol. I don't know. Target, Bishi. I was actually considering this as a put spread in the weekend letter over the highs, but it has earnings this week. I don't see where it's gapping, and there's no great pattern to me. UNG is gas. All right, yeah. Greg gave me a dollar sign in front of it. Thought he wanted the index or the futures or whatever. UNG, it's a sloppy sell setup, but the intraday is a mess. I don't see any nice pattern there. Let's see. You're also asking about pawn and AWH. AWH is a wide range breakout. That would be a great 1, 2, 3 continuation if it's set up. Pawn Oliver, I don't get a symbol for pawn. HXL. Yeah, HXL, yeah, I remember that supplier. It looks higher. It could be a poor trade. You just got to give it a big stop. I still have SPR on my core long watch list. It's sloppy. If you're trading the monthly, you need a big stop, but it definitely looks higher to me. That's a core watch. Oh, maybe Pan W. It's right at resistance. We can find so much better. I'm not going to be rushing into new trades here. AMD, and that's actually that's a put spread of ours. Recommendation over Friday's high, because then it would be red bar ignored. But I don't know, for day trade, it's a mess. It's not a good directional to me. It's a mess. Here, 2 other restaurant stocks, gapped up, pulled back, reversed. That's a watch. DRI, same, gap up, reverse, support. That's a watch. And this one actually looks fantastic for a day trade. Look at that. You got a rounding bottom. You got higher lows right here. You got higher highs. You got a nice end of day base here. You got a price void. That looks great for a day trade. I'm going to put him right here. I had TSM as a long. They're not showing. Oh, that's why I have to stop showing my gaps. All right, so TSM is gapping up too big. That was a long recommendation in our letter that I had to cancel. Excessive gap. Ride. This is worth watching. You know, big move off the bottom, consolidation. I like the pre-market here. HDS is being bought by Home Depot. Here's another big old gapper coming back, reversing on support, and it's gapping up. Plant that, I got it in this middle window right here. This one, 30-minute high candidate. I like this a lot. Beautiful, beautiful 30-minute high candidate right there. Wow, the tick 1500. The buying frenzy continues. And the stay-at-home stocks are weak. I posted a number of charts in the weekly options trader that I said, hey, I was going to put these in as bear call credit spreads, but the spreads were too wide. Zoom was one of them. Piton was in there. Look, these are all great bear call credit spreads. Debbie, I have no idea, but you know, Kramer was on in the morning. Facebook, there's no great pattern. I don't know, maybe 30-minute low, but I wouldn't do it right now. And I could tell that Kramer was scratching his head also, talking about airlines and restaurants. He's like, really? You know, do people not see what the problem is? You know, have you walked outside your door? And so these maybe these are shorting opportunities in airlines and hotels and cruise ships. Yeah, I heard Kramer saying that there still aren't going to be cruising until like March or something. All right, but DAR bottom right here.